Welcome to the BF Anderson Technical Report for September the 12th. The market's looking better. Things are improving here. The big change, though, is it appears that the market is going through a rotation here. Now, I call it the changing of the guard. And what happens is that you have a group of stocks that have been outperforming that stop outperforming. The sellers come in. Now, in some cases, the sellers come in and everything settles down and the buyers come back. In some cases, the sellers come in and then more sellers come in. So the best thing to do is just understand that we're going through a rotation. You need to have your awareness of that. Now, the NASDAQ, as you can see here, as we get into the charts here, we're getting higher lows, and we just got some higher highs. We are breaking out. We're back above the lower moving average, and the lower moving average is turned up. So basically, the NASDAQ and 4 other indexes that we follow are all on buy signals now. So it looks like the correction could be over. We're just dealing with rotation here. That's something that just happens in the market. Now, on a intermediate term basis, we have the 35-week moving average and a very nice uptrend. We never did break below the 35-week. We held, and now we're making a higher high after making a series of higher lows on a weekly basis. That's good. Also, we have the advanced decline line looking very strong. Nice, solid uptrend. This market is turning. It looks like we're going up. The high-low index, we're seeing more new highs than we are new lows. This is an improvement. Now, yesterday we only had 7 new lows. We're starting to see the new lows starting to settle down here. As you remember, back in late July, August, early September, we started to see elevated numbers of new lows. That seems to be settling down. That's a very positive sign. On the long-term indicator, now remember, the long-term indicator is a monthly moving average, 10-month versus 20-month moving average. This has been very back-tested by Luis Yamada. Now, if you go back and remember this very difficult period here, this was the period between 2014 and 2016, and you can see where the moving averages actually cross, so that would be a bear market, basically. Well, we don't look anything like that now. In fact, we're starting to see improvement where the upper moving average is starting to broaden out. The long-term indicator looks excellent. Here we have the put-call ratio. We've moved back into fear. We're almost into the neutral zone after being in extreme fear. This was pretty much a buying opportunity. However, it looks like the sentiment indicators are starting to normalize. Then if you look at another index, which is the S&P 500 large cap, and we're looking at it over a weekly basis. This is a 200-week moving average. Low, higher low, higher low, and we're very close to making an all-time new high on the S&P. Looks very positive. Now here's the one index that I really think is important. This is the Value Line Geometric Index. Now remember, this is an equally weighted index of 1,700 stocks. I will say that we are in what we call a narrow range bull market, and what we want to see is a migration to a broader range bull market. In other words, you want everything going up. You want the whole overall economy to be so strong that it pulls everything up with it. So if you go back and look at periods like this or periods like this, it was a very broad rally. Well, the problem we're having here is that the rally, the bull market has been very narrow, and as a result, you can see that the Value Line Geometric has pretty much been stuck and moving sideways. So on a broad bull market basis, we are not there yet. Now, if this index were to, say, break out and get into a strong uptrend like we have in the past, it's going to make all the difference in the world. You'll see what I'm talking about. Now, on the global Dow, we're kind of having the same problem, sideways. The international markets have got to pick up. So if we see a pickup in the international markets and then a pickup in the Value Line Geometric, I really think this market's going to broaden out. It's going to be like throwing darts at the Wall Street Journal. I mean, it's everything will be going up. Right now, it's just not doing that, and you have to be in very specific situations. Now, I thought it was interesting, and this kind of ties into to potentially what's going on with the Value Line Geometric and why it may break out, is small cap stocks have all of a sudden come to life here. Now, this is the S&P 600. Now, realize this is not necessarily technology stocks. This is mainly industrial and financial small cap companies, and it has been lagging the market for quite a long time, not making new highs like all the other market cap weighted indexes, but the fact that the small caps are breaking out could be an indication that the market's starting to broaden out. Now, I wanted to talk a minute about the economy. I have a typographical error here. This is the August report. In August, we had 130,000 jobs created. Our unemployment rate is 3.7%. So, the question is that are we going into recession? Well, this certainly doesn't look like it. And we're in a very positive situation here with the economy where unemployment is incredibly low. I mean, we are at like 50-year lows here. So what we want to see here, or we don't want to see here, is a spike up in the unemployment rate. We're just not seeing it. So there's a lot of hype out there about the economy going into recession. If we just look at reality and we just look at the facts, we're just not seeing it. Here's an index that I thought, or a fund that I thought would be interesting to look at. This is the Junk Bond Fund. In other words, the economy pretty much runs on credit. If credit dries up and the banks stop lending, we'll probably go into recession, no doubt about it. But as you can see here, junk bonds are doing incredibly well, so there really is no fear in the credit markets. Here's another kind of an example of what's going on. This is home construction, the housing business. With these low mortgage rates, it's just got to pick things up on the housing side. And we're seeing a lot of stocks either in construction or home building that are looking very positive. And that's kind of where the rotation is going. Now, one thing just to take a quick snapshot and look at here, this is the yield on the 10-year Treasury note. Now, interest rates have been dropping since 1982. So basically, the economy's been in a deflationary cycle since 1982. We're talking over 30 years. Now, all of a sudden, interest rates have gotten down here where we've gone from 9% back in 1990 on the 10-year, and we're all the way down to 1.5%, 1.4%. Well, actually, yesterday, 1.55. So interest rates are at historic low levels because we've been in this deflationary cycle. Now, what we're hoping here is that this is going to reverse. But the thing that needs to be pointed out, and this was recently an article about Michael Burry, who was the doctor that was in The Big Short, the movie. And he's saying that there's a bubble out there. And that bubble has been caused by this because when you see interest rates going down, it causes a certain asset classes to outperform everything else. Well, Burry is of the opinion that this is getting ready to reverse and that this is a bubble, that basically the bond market is in a bubble. So all in all, things look good. The economy's doing well. So let's get into the top 5. Now, remember, this is a watch list, and we want to be extra careful right now because it's almost like whack-a-mole. We're seeing this rotation, so stocks that look good this week may not look good next week, and you'll see what I'm talking about. But anyway, here's biotechnology, a company called Allakos. Gap up. It's got basically a sideways flag formation that's actually starting to descend. I think I would just watch this one. This is Roku. You can see the problem here. We broke below the 10-day moving average, pretty much gave a sell signal on the stock. I would watch it closely. I would avoid right now. Shopify, same thing. We've got the breakdown below the 10-day, actually broke the 50-day. Again, these are stocks that are being rotated out of, but have been strong. Now, here's something that seems to be where buyers are coming in. Target. You got a major gap up on the earnings announcement. You've got an ascending flag formation. It's holding above the 10-day. That's the kind of thing that's starting to move right now. Here's another company called Western Digital. This would be a technology stock, involved in hardware drives and technology. Again, in an uptrend, looks good. 10-day moving average is in a nice pattern. It's one to definitely keep an eye on. But just realize we're going through a rotation period here where it's like a changing of the guard. So what you want to do is just keep your powder dry and move slowly here. In fact, we're moving at half speed at this time. If you have any questions, give me a call. Thank you.